Iceberg highlight again. It was a nice couple breakouts this morning. And so when we go across and we tag an iceberg, we tag it and we show what he's showing 75. That's this number right there. The guy's revealing 75. So every time he gets filled 75, he's refreshing. So we tag it as an iceberg and then we track how many he's done. So you're going to see this number grow 755. That's how many he's done. He's showing 75. That's going to remain the same. You never know how many he's got left, but you could assume that it's no more than 3,000. And then they with these, they roll like 2,000, 2,500 and you get close. Generally, this is what happens when we see it. At first glance, the market kind of walks away from it a little bit. Oh, there's a lot of buying. And so the market will pop. Remember, it's green, so it's indicating a big buy order. Comes down there, plays along 1132. Now, 75 is a big number to reveal. So there's probably a couple thousand, maybe 3,000 he has there. It's a magnet. And we get in a whole nother webinar of why it's a magnet. But once it gets close to the 2,000, and if you play a breakout, you generally get people leaning on right there. If you see 2,000 come in, boom. Anybody long who is leaning on this big buy order to get out starts to chase it and say holy shit when it goes. That's the word that was always synonymous in the pit, on the floor, and still with trading. Lean, Lean. They lean on a big buy order. Why? Because if you're long, what do you need to get out? First of all, when you're long, you're a seller to cover that position, right? And what do sellers need to get out? They need buyers, correct? What is this guy right in here? Not only a buyer, it's a lot of buyers, right? A lot of buying, a lot of contracts. So does it now make sense that longs who are sellers would lean on this order and say, I'm going to remain long looking for upside until they take him out. Then I'll get out with him. I know where my exit is. The problem is they miss it. And then they're stuck and there's a breakout. The beginning of a breakout could generally start. But there's a really interesting, nice probability check after it goes through to stay short and know that it's going to have a continuation. I'm going to show you that in a second. And that's really the most important part of this highlight. So first is the iceberg, the idea of too many longs, and we do have longs in here that you could see leaning on it. The idea that longs are sellers and sellers need buyers to get out. Here's the buyers, right? So if you play this, we can play this out. What's interesting is as soon as it blasts through there, you get enough longs and a nice, I'll stop it, a nice accumulation of long positions underneath it, which is what you want to have some continuation. Number one, we get short looking for the breakout. Hold on, I had that too loud. First of all, you get a head start. If you were short, we played above here, played at here, you get a head start. You got money into this particular trade, and the breakout is still underneath where you would have sold it. And what do you want to see here? You want to see more green than red. And you want to see these greens, people getting long, looking for this thing to bounce. More longs, more sellers, more pressure to continue to go down. That's what we see in here. And in fact, in real time, you're going to see my cursor come in and point out all the longs that we were getting in here. This is my recording cursor, but watch the other cursor come in from the video that says there's still some more downside because of all these longs that we have that are showing. And that's what this vertical, there I come. Look at it. All this buying coming in after we break out is indicative of more downside pressure. This is why trading this is the skill that needs to be created in stacking probabilities so that a prediction doesn't seem like a guess. A prediction doesn't seem like a guess. And as you see this market continue to roll lower, there was a chance for a little bit of a bounce in here with these shorts. The market just remained weak. As you could see, bam, when these longs come in right there, boom, that created, let me back it up and show you to you. When these longs come in here, they get underneath it, kept pressure on this market, and They kept rolling lower. They come into our area down in here, light up red, place to cover. But the point of the matter is, what's the beginning of, look at this, more longs come in, more pressure. What's the beginning, more longs come in, more pressure of a particular breakout? That's not going to be random. And it's when you get a lot of LONGS's longs leaning on an order and they miss it to get out. All right. You always get longs leaning on big buy orders and shorts leaning on big sell orders. Conventional wisdom. It's important to know conventional wisdom and often do the opposite. It's important to know what's obvious to most of the rest of the world and do the opposite when they're wrong, because that's what moves markets. When markets are out of balance is when they have to reprice or rebalance, and that's where the opportunity comes. That's where a market's cheap or expensive. If it's cheap, it's going to rally. If it's expensive, it's going to break to adjust. And people don't understand the whole basic premise that moves price, why price moves. So if you're going to predict price, you better know what the hell moves it and make what's basic to me basic to you. And this stuff, this whole area of a lean is not something people learn even several months or years into trading. The lean, the idea that a long is a seller and a seller needs a buyer. And when too many longs are leaning on a price and that price goes, there's some follow through. Really is. So just keep your eye on not just recognizing icebergs, but know what to do with them and how they become the beginning of a breakout. And also, what's nice about them is when they don't show a lot of longs in here to show continuation of the downside and they jump and they get above that spot, it's often probability that they shook out longs enough to go up. You need less longs to go up. It's very helpful to shake out longs in order to go up. So good luck. Stay safe. Remember, you're either in our group or on our charts.